Joining me now is Eddie Ghabour, co-founder and CEO at Key Advisors Wealth Management. Eddie, welcome.
Thanks for having me.
Eddie, how is the conflict in Iran affecting your investing strategy?
It's really not going to impact our investing strategy at all. I'm actually kind of surprised the market here, pre-market, isn't down more. If anything, I think this is another time to continue the rotation into the economically sensitive names. Traditionally, when you have wars or attacks like this that happen, the markets are down for the first few days trying to assess things, and then a week or two later, markets are back above those levels. So we focus more on the fundamentals of what's happening on the economies, and we are not making any knee-jerk reactions based off of what's happening overseas right now. So I think you're going to see the same theme. A lot of volatility. We had it prior to the attacks this weekend. And a rotational trade out of technology and going into other areas that are stronger and tied to the U.S. economy.
And we understand, Eddie, speaking of that you're holding a position in gold given the uncertainty. Why do you believe this is critical, especially right now?
So it's interesting. Gold has been on a tear for a couple of years now, and it's been working when things are very bullish. And then when you have fears, it works even more there. So we look at gold as an amazing hedge to have in a portfolio. And as geopolitical tensions rise and uncertainty rise, more and more demand will go there. So it's no secret central banks around the world have been aggressively buying gold for a couple of years now. Doesn't look like that's going to change. And so we look at it as a long-term diversifier in our portfolios that are going to be playing better defense than your traditional bonds would have in a 60-40 or 70-30 type of portfolio. So we actually put gold in place as a replacement for some of our bonds for clients to play defense, and we're very thankful to have it, especially on a day like today.
And Eddie, what other areas of the market do you see as the biggest buying opportunities right now?
So what we've been doing is we've been buying industrials, home builders. One of the big things on the home builders is it's no secret now, mortgage rates have really come down quite a bit, especially now with the 10-year under 4%. And we have been in a position the last couple of years where housing's been very weak and housing stocks have been very weak. We look at it as a contrarian play on an economy that's going to expand as well as interest rates going down. Industrials is just a theme of the global economy accelerating. All the data centers that are going to need to get built is great for that. Small caps as well, too. You know, small caps are going to do well in an economically sensitive arena where growth is going to accelerate. So it's not going to be a straight path up. We're going to continue to see volatility. But one thing we believe the market is saying loud and clear is the tech trade, which is the most concentrated trade in Wall Street, is going to be a source of funds where money managers are going to be forced to sell technology to rotate into these under-owned areas. So we would continue to buy dips and continue that rotation on weeks like we may have this week.
And we understand that you see opportunity across international when it comes to broadening your portfolio. Can you elaborate on that?
Yeah, so, the emerging markets trade is something that has been catching a bid now going on for a couple of years. I think it's been under the radar. And one of the things that kind of goes with our theme of broadening things out, we think markets are actually getting healthier. All the focus has been on the weakness in tech. And we think that's just a function of how crowded that trade is, and money managers and investors around the world recognizing that there's other places to go outside of tech where earnings growth can be much higher. And so we're looking at international markets for the first time in a couple of years as a way to really diversify and go into places that we think will outperform the NASDAQ here in 2020 and 2026. So we're going to buy some international exposure this morning at the open because they're taking a hit. And we'll continue to increase that position if we continue to see downside due to the geopolitical threat. So the drop in international markets that may come from the tensions in Iran, we're looking at as a great time to add to our portfolios for our clients, because 6 months from now, we think those buys could be up quite a bit.
And from the recent tech and AI uncertainties to the conflict in Iran, what advice are you giving clients when balancing these different uncertainties?
So, you always have to go back and look at what their goals and objectives are, right? And all of our clients are long-term investors. So these short-term drops that they see in the market, is not going to change anything or cause them to make a knee-jerk reaction. The biggest thing we tell clients is we're not going to sit there and hold an asset class that's heading into a bearish market. We're going to be very tactical and active and get out of harm's way and rotate in the areas of strength. We started getting out of tech and reducing our exposure last year, and we're going to continue accelerating that. We're not going to go to 0% technology, but again, I think it's very clear that there's much better places to be in 2026 than just the tech trade. There's a lot of other bullish areas and allows you to spread the risk much more too, which on the margins should reduce volatility for investors.
Eddie, in our last minute together, what else are you keeping an eye on this week?
So we want to keep an eye on energy prices. You know, one concern we have is if oil gets too high and then you start to run into a scenario where inflation really reaccelerates, that could be problematic. So that to us is something that we want to keep a close eye on. We think that by the end of the week, oil prices should calm down and probably drop from where we are today. But we are open to any outcome on that. But that's going to be a big deal for the U.S. consumer and could change the trajectory of the economy if oil prices get too high.
Thank you, Eddie Ghabour, co-founder and CEO at Key Advisors Wealth Management, for joining us.
Thanks for having me.